Morning, guys. So I've been asked in the last couple of days, I guess, since my last few streams, and I've really said the same thing kind of over and over again. I've been asked questions as could the count be this and could the count be that? I think the reality is, from a retail perspective, everybody's wanting the kind of pain to be over. Okay, so when you look at Elliott waves, and this is the basis of what we'd actually show in what we teach, it's only a bias that I'm looking at in terms of Elliott wave, right? So the internal counts are less of an issue; they're less concerning to myself and Paul. If we look at where we are on a monthly time frame, right? You've got to zoom out to get a real clear picture of this. I've just used an offset Weiss wave tool here, and it's kind of obvious, right? I've said, from the start, I personally don't like anything kind of prior to 2017. I've been lucky enough to be in Bitcoin since 2011. I've seen this from not only a trade-in side, but I'm actually a venture capitalist. And one of the things that we invest in is blockchain-based technology, cyber-based technology, AI-based technologies, and therefore it's kind of advanced technologies, predominantly for the security sector, but for the financial industry. Okay, so what I've actually seen over the years is that going back, 2016, 2017, there was an appetite from a VC investor community, but everything was judged on Bitcoin. Okay, so lots of people, including myself, we were pitched over and over and over again what we now regard as altcoins. Okay, so there was various technologies and various plays, but at this point in time, there was no real institutional money playing around the way that they play today. And when I say institutional money, this is now where I take the VC hat off and put my trader hat on. I've been trading 21 years, guys. This is something else that, I suppose I'm just a professional investor. And I think from my point of view, I'm looking at this chart. I'm looking at this now from the left-hand side being the VC, the right-hand side being a trader. So if I was to take the actual run-up, what I would regard as one, right? There's your first one wave in your Elliott monthly. You then have quite a long eked out two here. Three is always going to be that largest wave, the momentum, the run. And then we've actually got, I'll come into this in a second, we've actually got an interesting couple of options here. Okay. So just to draw that on a chart to, kind of iron out any form of confusion. For me, I'm seeing this 0, 1, 2. We now have the 3. I'm going to put 4 and 5 out of the way for now. Okay. So that's really what I've seen so far. Now, back last year when I was calling the rocket call, and obviously March, you could see this come in from the value area and some of the things again that we teach. You could see this come in a mile off in terms of why the distribution patterns were showing in and around this level, right? So I've covered this. If you come into my profile, if you've watched obviously our streams, if you're new to watching our streams, then just come into my LinkedIn profile. Actually, my trading view profile rather than LinkedIn. And you'll actually see I've got a few posts talking about some of these, and I go back to where I just find the roadmap update. Yeah, you can see we've got Bitcoin Elliott, Wyckoff, COT data, roadmap. Here you go. So on the 8th of November, I've actually covered why I was calling the top, why the bottom was potentially in based on where we were, and why I didn't like the move up in terms of this move back. So I've covered all of this as we've kind of gone through step by step. This starts off with the March calls, what I was seeing back on the 18th of March, why I was calling this and why this was distribution rather than accumulation. Every single aspect has been covered in these posts, right? So this is all free. This is all in TradingView and easy to find. So in essence, understanding where we were at this particular point, right? The reason that I didn't like the move from here is the risk reward ratio was pretty poor, right? We actually had this move here, which is what I would regard as the invalidation level. So let's put that as red. So the invalidation level for the Elliott count meant that if we come down as a 4 into that zone, we would have invalidated the whole count on a monthly bias. Okay. Now, the fact that we had quite an aggressive move down and then this move up went up on low volume, at the time, people were saying to me when the price was around here, it was, yeah, but the volume is actually lower because the price is higher. The volume was higher here than here, right? And just using this Weiss as an example, you put that, let's just say the middle of this green candle there, higher, put that as something different like a blue, right? And you look at what I've just marked up there. This was in essence the kind of volume that we were looking at here, right? A lower down price down here. I'm going to change this to yellow, right? And then we've actually got the same point down here, right? So you can't tell me that buy-in volume was different because the price was higher. It's actually higher on the left than it is on the right. Okay, so this is where the COT data comes in, and this is why the moves were called the way they were called. And the obvious play back in August was we were not going to go up beyond 65 was what I was anticipating on that particular run. And the reason for that was you could see from an institutional perspective, and again, I'm talking institutional now being hedge funds and large operators in the trading space rather than venture capital and family offices and private money in that, what people would regard as whales potentially. So back end in September, I was looking at why this level here was actually the key level for a potential bounce off this level. Now, this was in uncharted territory. This was brand new in terms of the levels, but it was actually a nice extension level as to where we were going. Fast forward a month into October, and we actually come up and rejected off this level. So it was just above 65. We then come up and back through, and the all-time high actually went ultimately to the 69, but didn't close above this level, this range, okay? And then all we've done then is come back down to this cluster around lots of liquidity, in essence, okay? So coming back then to the point that I made at the start of this video is if we now look at what happened here, right? Clear as day, we've got this little red, which give us a very fast drop down, right? But it wasn't a lot in terms of the volume compared to this. Now, there's a clue in there, right? And ultimately, what you've got to understand when you're looking at this is that in Elliott wave terms, this is almost the opposite, right? You've had a very slow drawn out 2, which means you're likely to see a fast fall. Okay. Now, the problem for me with looking at this now on a monthly, right, meant that even if I assume that this is a monthly rather than a weekly, right, and this kind of makes the case even worse if you are actually permanently bullish on this particular move, because what we're actually seeing in this is a move there down, which we could assume being then the fall, right, and this particular move up give us a truncated 5, right? So let's assume that worst case scenario, this was the 4 and this was the 5. All we've done is created a grand scale double top, right? And that's what we've got there. Now, that obviously seems doom and gloom, and it's not quite, right? Because there's a couple of other plays and a couple of other options that you need to consider. And this is coming now into some of the questions that I've been asked, right? Now, when I'm looking at assessing the chart here, although I've put this on the monthly, I've actually used an offset, which I mentioned right at the start of the video. And the reason for that is when I come into the 2 to 3 move, right? And then we've got something that looks like this, right? Now, you don't see this on the monthly time frame, but if I drop down, get rid of this. If I drop down now to the weekly time frame, what you actually see inside this is a move that looks like this. Right, so get rid of this one again. You actually see from the 2, a 1, a 2, a 3, a 4, and a 5. And on a smaller time frame, you can actually see again the moves inside. You'll see a very sharp 1, 2, a 3, a 4, and a 5, right? So that for me ticks a box. Now, the reason that I said it's not all doom and gloom is that I looked from the monthly time frame out and brought this back to then the weekly in terms of the offset. Okay, so if I'm now assessing this move, I'm going to move my 5 out of the way. I'm going to move my 4 over here, my 3 over there, and therefore in the weekly, I'm actually seeing the 1, the 2, the 3, the 4, and the 5. Okay, and this still being a truncated 5, but actually on the weekly move, right? Basically weekly 5, which equals monthly 3. Okay, so there's nothing really complicated about that, right? And a lot of this is available on the last couple of streams on YouTube. Obviously, Paul talks about this a lot in terms of the daily streams with TradingView, and we've covered some of this on Twitter and so on and so on. And of course, the education is actually inside our Discord, and we can teach you how to do this, properly. So in essence, what I'm seeing from here now, right, is we had this low volume move up, right? Now, I've talked and talked and talked about why I seen this 1, 2, 3, 4, and a 5, and we had this then, like I said, truncated at the top. So it's basically what they call shortening of the thrust, right? This was basically dying a death as we creeped up to new all-time highs, right? Now, I know I've mentioned this to our members. When you pass a previous all-time high, it's the expectation, which is why the fifth wave tends to go, beyond the third, is that you're going into new territory and you'll be attracting new buyers. Now, the problem for me was on the COT data, we're actually leveraged funds still very, very well. It's a massive level in terms of shorts. It's just short. It's very, very short, right? Now, leverage funds are basically profit taking into retail that are currently buying, right? And you could see that on the first move up, like I said, go back, January last year when I was explaining the value area into February, why the key levels were coming back to the 36 before we'd move on up then to the 60K range before ultimately the rocket call drop, the roadmap. And this was all written, last year in terms of making this all public. Okay. So nothing's really changed in terms of my opinion, right? Nothing's really changed in terms of the direction where we are. I think this is the overall situation. Now, coming into this a little bit deeper in terms of where we are right now and why I think, where and what we're actually seeing. Why is this clicked on? So, why we're actually seeing what we're seeing, right, is I think overall, what we've actually got, I don't know why there's graphics in the background, but in essence, what I'm actually seeing with this is there's two very likely scenarios still on the table. Okay, I'm going to take this out of my way just to make this easy. Right. So first things first, after a large scale move, which is a monthly 3, right? Now the problem is you've also got the 5 of the weekly. Okay, so I personally would regard that as quite a big end of a trend. Now, in Elliott wave terms, the larger the trend, it's not a rule, it's more of a guideline. And I suppose you'll see this the more and more you utilize this. A lot of the time, right, you'll see that the first move after a large trend change is more likely to be a zigzag than a flat, right? Now, I'm not saying it's all the time, but it's more common, right? Now, I've mentioned why I didn't like this as the end, although it's plausible that it could be, right? One of the reasons I didn't like was the 1, 2, 3, 4, and the 5, right? Didn't actually reach the extension levels I was expecting, whereas this one tagged it practically to the pip, right? So that's the first thing that I didn't like. The second thing was in terms of then the smaller time frame. So I'm going to come down now into the daily. On this daily time frame, let's zoom out a little bit. Now, I was seeing a 3-wave move up, which I didn't like, 5-wave move down, which I didn't like, right? So that's kind of an uncommon situation, but clearly this was a larger scale accumulation, but on a smaller spectrum in the grand scheme of things, right? Because these institutional players were still holding massive positions from way down underneath 40K, right? They were actually selling from 40K upwards in terms of extra profit. It's almost like you giving these guys a tip. You go there, you buy your steak, you pay your $100, and ultimately, let's give them another $100 for the sake of it. This is where retail were desperate to take this to 100K. And this is why, for me, the reason that the volume, wasn't keen on the 24th of August, I was actually saying, look, the extension level here was likely to give us the pullback, and the pullback then would give us the move up into, I said, 62, 65K, and then we'll get the drop again. And that was on the 24th of August, right? So we've actually done exactly what, I thought we'd be doing. And this is not a question of saying, hey, look, guys, I was right with this call. I'm trying to break this down as to how you can do this as well, and how you can understand, what I'm seeing, why I'm seeing what I'm seeing. So first option, let's assume that this was the end. We then have an A, a B, and a C. We have another A, a B, and a C, right? Which means in theory, we've got an A, we've got a B, okay? And let's assume this being the C, right? Now, a couple of things that might work on this is I'm just going to use these fibs and come into this, and you say, well, a 3618 on a move like this is colossal, right? And you probably invalidate all kinds of rules, although there's less rules on the on the pullback moves in terms of Elliott. You invalidate lots of different things as to why this could be, right? So if we assume that that's one option, right? Now, yeah, could be. I'm not a fan, but it could be. I'm not ruling it out. Now, the reason that I mentioned again earlier, one of the things I do with Elliott is I don't look for every in and out of every single swing and every single move, right? I'm using Elliott on the larger time frames, probably the daily, is where I like the kind of the sweet spot. But ultimately, the monthly and the weekly is giving me the bias as to what I can see kind of internally. And then I'll use the other techniques to actually get, kind of more defined entries for what I'm looking at. So the second option is I'm going to take this one as my 5 and my 3. So my 3 monthly, my 5 weekly. And I'm going to look at a couple of different things, right? So first things first, this one's quite a small move, and there's a couple of them that happened here. There's a couple here, right? So first things first, I'm going to go straight down for a 1, and I come back for a 2, down for a 3, up for a 4, right? Now, I've just said to you guys, zigzags are the most common in terms of the corrective structure after a large scale move. I do count the 5 weekly as a large scale move, right? Now, if we come back down like this, right, there's no expectation to go deep on this move, right? This is just going to be drawn out, right? We are currently in a monthly 4, right, is how I'm reading this. So a weekly 4 went all the way from, what were we? I think the move that I was looking at on the previous move down. The weekly 4, from the top there went from April all the way down to the bottom there in July, which is it's a good couple of months, right? So we can easily add extra time just because this is monthly rather than weekly, right? Now, if you start looking at options and angles, we could see, we could see some nice wedges, we could see some nice breakout patterns coming from this. But in essence, I see this as the start of the wave now next down, potentially a double top up, right? It's just filling these wicks here. A double top up, a move back down. It doesn't have to come all the way, right? But in essence, it's looking to create or grab some more liquidity around this. And a lot of retail are going to see this as buy the dip, right? Which is fine. But ultimately, all I'm seeing there is the end of an A. And then we can actually take, if we were to assume that, let's say this is the low, right? Now, that's not to say that A is in. It could be that the A is there and we actually get then, a failed fifth wave down on this move. It could just peak just below. It could hit 29 again, 30, just to take the low of this out and just to finish that kind of properly. But this is Bitcoin. Composite man can be very evil. And I think this is why I'm a fan more of this move as a whole. Okay. So if we now look at these levels and we look at these numbers, we're going to come on down like that. Let's get rid of some of these. I'm going to get rid of some of these drawings so it's a little bit easier to work with. Let's get rid of all of these. There we go. Okay, so let's start back with, there's my top, there's my 1, there's my 2, there's my 3, this is potentially my 4, and I'm going to be looking for a double bottom type 5. From the 5, we could then work out what kind of levels we'd be looking for on a simplistic type of tracing. So assume that that is the low. Let's drag it down a little bit lower just for the sake of it, right? Another K, for example, and that will give us a good idea of where the pockets are. So if we look at the golden range, 50K, just over 50K would actually be quite evil if we think we're going to come on down back into a pocket before coming back down again. Okay, and I'm just going to put a question mark on this, all right? Because again, it doesn't have to be deep. It just needs to be frustrating. So 3, 4, 5, we come back then, which in essence gives me an A. This would give me a B and a C. I'm not even going to go into that level yet. Okay, so in essence, the reason that I think this is very viable, 1, because of the time frame, 2, because of the lack of volume on this move up again, lack of interest, right? If this was actually the first wave of, a 1 of the 5th of the monthly time frame, you'd actually expect to see this being quite aggressive in terms of a move up, and then a very aggressive move back down, which in essence would be a 0 to 1, back down 2, and 2s can be very deep. Then we go 3, then we come 4, and then we go 5. But if this is what we're seeing right now, then I feel that just the same as having a truncated 5 on the weekly, we're going to end up with a truncated 5 on the monthly, because it's a very similar type of momentum at the moment. And that's the reason that I'm saying that I don't think it's doom and gloom. I think ultimately what we're likely to see is a completion of A, then we'll have an aggressive move up B, and that will be the one that will sucker all of the retail in. Tagging 50 or going above 50, it's a psychological level. Some of these clowns are actually saying, 50, it's only half of 100. It's easy to get this, just double it. It's that type of mentality that is going to lose people accounts, right? So when you think of what we are and what we're doing, we've got a much bigger time frame that we're working on and operating on right now. We've actually got potential for a pullback down 5. Now, even if this is wrong and this is the 0 and this is the 1, then we're going to get a 2 any which way. That 2 before we move up. And then you'd like to see the motive, the intent, the bullishness of that move. Right now, we've got bullish Twitter sentiment and nothing else. So I think just be careful with this move, right? This is what I'm seeing right now. And obviously this is what, I'll keep kind of updating. I know Paul is going to go into smaller time frames, more and more and more. But for me, this is what I'm seeing. Nothing's really changed. This is where we're at. And this is actually my preferred option in terms of what we've actually got right now. So anyway, I hope you enjoyed this one, and I'll see you in the next stream. Thanks for watching, guys.